This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview.
Joining us today is Jason Brewer, of course, the CEO of Marula Mining, following news of the 5-year budget approved for the Kilifi Manganese Processing Plant. Well, thank you very much for your time. As always, Jason, how are you?
I'm good, Mark. Good afternoon to you.
Well, thank you for joining us. So you've highlighted confidence in starting these operations in April this year, meeting that initial 5,000 tonne delivery. So what are the biggest risks to hitting this timeline, and how are you and the team mitigating them?
Look, we've had the team, our own owners team, our management team up there for the past several weeks. We appointed local mineral processing consultants who have been there for the past 3-4 weeks now doing work. That work is largely completed. I think the final work is within the next 5 to 7 days.
Okay.
Then we do dry commissioning, then wet commissioning, and we're in a position there of actually then operating the plant with the feed. So the key risk from our perspective is, look, we've got to do a final audit ourselves to make sure that each and every permit and authorization is validly in place. So that's just, boilerplate stuff, which we do the checks on there. And it's the delivery of the material to the plant, which we've obviously contracted with 3 different parties to receive. So, those are the 2 key risks, I guess, but we've mitigated them by having 3 different suppliers. Okay. And we've got our whole team and our independent lawyers going through and just giving us a sanity check, I guess, on the permitting status to make sure everything is in order.
Okay, good. Now, I've been reading through some of the investor comments here, so I'm getting the vibe that investors are pretty excited about the £182 million revenue there and that 40 million cash flow projections here for Kilifi. Could you perhaps break down key assumptions here, perhaps manganese price, operating costs behind these figures, and how conservative or indeed aggressive they are?
Yeah, look, the material that's being fed to the plant is what we've got contracted with 3 different parties, and we're only using 80% of that feed. So there's capacity there to bring in additional feed. The budget is basically reflecting the contract that we've done with Bow Steel Resources, obviously the world's largest steel manufacturer, and by that very nature, the largest consumer of manganese. So the feed to the plant, very conservative assumption there. Okay. We've also not assumed that we're actually mining material ourselves. However, over the next 12 months, we will be in that position to do so. And clearly, we will be able to do it at what we believe is a lower cost than what we're actually purchasing it for under the 3 different agreements in place. Okay. The price assumptions, basically, we've used the current price out of South Africa, the reference price for 37% feed. That's quotable. Shanghai metal markets, investors can go and see that. So we've used actual costs and actual volumes to be delivered. Our cost base is what we have already in place under agreements. Our staff, our labour, the key consumables, all contracted rates. The processing, we know the processing costs to operate that plant on a daily, on an hourly basis. So we know what they are. We then have the logistics cost, which is one of the biggest costs associated with this. And we were able to come out and put clear numbers on them because we signed an agreement with Scan Global Kenya just earlier in this week, giving us certainty over this cost. So the majority of all of these costs are what we have contracts in place for. It covers key suppliers, key contractors, and our key staff as well, which we've now recruited over the course of the past 2 weeks. We have a full complement on site, and we're all set for the commissioning in the coming week.
Okay, good. I also saw comments suggesting a 10% manganese price could increase or boost cash flow by 28%. Some people predicting 15,000 per tonne. So how are you seeing the manganese price and could that volatility up or down impact the 5-year budget plan that you've announced today?
Yeah, look, we've run our budgets just on a flat price there.
Yeah.
And using an assumption that we're selling a 37% product. We actually believe that we'll be able to achieve a high grade product, and that, getting a 40% product would add roughly 10% to your revenue price. Okay, so again, you're increasing your revenue quite significantly. So relatively same cost base. So you're able to really work that through. One of the key things which we've made very clear is that we're looking to move from just the DSO, the manganese grade, to doing a high purity manganese, which is used in the battery markets. What you're seeing, and what I believe is going to heavily influence manganese prices going forward, is the demand for manganese in the battery sector.
Okay.
The majority of it at the moment is in steel, which is driven by industrial production and so on. And you're seeing that turn quite significantly as well now. But I do believe going forward, the demand coming out of the battery sector for manganese will have a significant impact on that pricing. And that's where I think we've got the best upside going forward.
I noticed that the RNS also was stating that any future expansions would be funded from the cash flow. So what's the expected timeline for generating sufficient cash flow, and how much CapEx might be needed for the plant expansion or indeed a new mine development?
Look, I think the plants, we're very comfortable that we can do 10 to 20,000 tons there operating, between 10 and 15 hours a day. We're very conservative in our assumptions there. The model which we use effectively started off, and for 3 of the 5 years we were looking at a single shift. So there's plenty of scope to expand this, and this could operate. Once this plant is operating, you can keep it running for 24 hours.
Okay.
You've just got servicing, downtime, maintenance work to do. So as we go forward, the major CapEx items are really not going to be on the plant per se. It's going to be on the new mine development. And what you've got there at Kilifi along that whole coastline, you've got a 30-kilometre stretch of manganese mineralisation occurring at surface and going down at considerable depths. We've identified, as we announced previously, some very high-grade material down at depths of between 4 and 5 metres. And this stuff was 50 to 60 to 70% manganese. So there's a lot of upside there if we're able to better quantify the volume of that material. But as we go forward, CapEx on those mines, it's shallow, open pit, conventional mining. There's no drill and blast. It's free dig, okay? So, the sort of CapEx you're talking about there and working capital associated with that, is $500,000 to $2 million. And let's be honest, we're going to be making that in a couple of months. So we're able to reinvest the capital to more than fund any plant work and what we're expecting to be able to do on the open pit mining too. Okay,
good. Now, what about this 30% tax rate? Can that be offset anyhow from either from Kilifi or Kanousi? How does that affect things?
We are operating this under a separate Marula subsidiary. And yes, of course, there will be some items which will be able to be deducted from there and reduce that tax rate or that tax amount paid down. We just put in a flat 30%, just for like an arbitrary assessment. When you look at the taxes paid, like the corporate tax paid, and then you start adding the government royalties, then you've got local staff payments and everything. We will become a very considerable contributor to the government in terms of taxes, royalties, and other payments in Kenya very, very quickly. So, no, look, tax is something you always look to optimize, but you've really here, you've just got to get ourselves into a position where we're expecting to be producing some significant profits. And if we're paying tax, that's actually a good thing, isn't it? It means you're making money. I mean, I'm not an accountant. I'm not as smart as these accountants when they do all the accounts. But look, if we're making good money, then it's only fair that everybody shares in the wealth that's generated from this mine.
Yeah, and so those cash flows are expected very soon, Jason. What, in the next 1 to 2 months, or?
Yeah, look, we like I say, we will be dry commissioning, then wet commissioning this plant over the next 5 to 10 days, and we will have material starting to come and be stockpiled in this at the processing plant. I'd say in the next 7 days.
Okay.
We've got 5,000 tons to have transported down to Mombasa before the end of April. That's 200 truck movements. That's a fair, we do say 10 truck movements a day. We can knock this off relatively quickly. So we're expecting the cash flow to kick in Obviously, at the end of April, when we get a provisional payment made, that money will be reinvested back in there. The first month we're cash flow positive. The first 3 months we would have paid back the capital to acquire this asset. So it's a very good, interesting opportunity. We hold 80% of this project. The numbers clearly show that we should be moving to 100%. And from my point of view, we should be negotiating, and we are negotiating, the acquisition of the residual 20%. We've got to do it. Once we're producing and making money, our partner's price for that balance is only going to go up. So we've got to move relatively quickly now and do that. The numbers support it. The board support it. So we'll be looking at that over the coming weeks because it really does create more value for us.
Okay, good. Well, I know we've talked before, so this is effectively, you've got 2 of 3. I know we're still waiting on Blesberg to finalise some of those agreements there, but 2 of 3 producing and revenue generating assets. So, you've released pretty detailed information on Kilifi here. So what about Kinoussi? Can the market expect to see similar detailed financials for Kinoussi? And I know people were definitely calling for pictures of trucks. There's going to be quite a few trucks moving, it sounds like, Jason, soon.
There is. Look, and we will be putting out an update imminently, just confirming that Takeda are expecting the funds from that initial sale to be received in the next 48 hours. So that's pleasing to see. With Kinoussi, we will be putting out numbers like this. What we're waiting for is Darren McGaw, who was doing the metallurgical test work, to confirm the phase 2 flow sheet. We've received the indicative report and we've put out some commentary on that in an RNS. We will be putting out a similar announcement, a similar budget approved for Kinoussi once we get that in the coming week. So yes, we'll have that there. We'll be doing it for all our operations. Blesberg is the next one. There's some very positive news coming out on Blesberg in respect to the mining right, the environmental bonds and environmental permits and so on and so forth. That unlocks Blesberg and then allows us to push forward the appointment of the mining contractor, the processing of additional mineralization that we identified earlier on, which we now will have the right to process and recover and sell. So there's a lot of news which will come out on those projects, but I guess what people need to see is numbers like this. So then they can see exactly how it looks. You've seen it today. Kilifi alone, when you look at that 5-year valuation under the Bow Steel contract, that's 14 pence per share. Okay, 14 pence per share compared to our current share price of 5.5 pence. And that's one of a series of projects. And Kinoussi is probably the most profitable of them. Okay, so if you think 14 pence per share at Kilifi is good, let's get the numbers, as we will get out very shortly to let people see exactly what that is. And then they can make the proper valuations and see exactly where Marula sits in terms of where we'll be from a dividend point of view, a valuation, and a share price point of view.
It is interesting. Have you got the trucks left Kinoussi already? Have they gone?
Yeah, there's a number of trucks which have left.
Right, okay. And you couldn't get pictures in time with internet problems?
What we've had Maremi down here, we've had people up there. Kinoussi has no coverage. So the Kinoussi mine has no coverage. Okay. And the people up there, it's an impoverished area. So unfortunately, not everybody has smartphones like us, like we take for granted. You go there, Mark, and you'll see the old Nokias that we had when we were kids, which aren't the best. We've got some photos which are due to arrive today. I've got Maremi in the office here. Maremi's heading back there, I think, at the weekend. We've got to head up to Larasoro, to Samburu later today. But yeah, we will be publishing pictures of them. It's amazing. What did people do before social media came around? Hey? Exactly. But no, all of that stuff is heading out. We will have that there. We will have the money in the bank within 48 hours. That money is going to be reinvested by us, by Takeda, back into the operation.
Right.
The second sale process, we'll have the third. People got to recognize the reason we did these initial trial shipments was basically to target who we wanted to be as our offtake partner. We've had some additional and very serious approaches since then from other players, from bigger players, which we will look at and we will consider. Bow Steel, for instance, they don't just take manganese. So, they're keen. Let's see where we get to after our first manganese sale to them, and then we'll start talking to them. But, we will get these photos out. We will get images out. We will get videos out, because that's what I think we do well.
Okay. I think it comes down to seeing is believing, and seeing the hard numbers or the hard pictures, because you mentioned there the share price about 14p based on Kilifi alone. And of course, the market doesn't react, does it? I mean, is there anything you can do apart from just delivering? Could you do broker notes, or could you do other marketing to help advertise yourself, I suppose, to the market and say, hey, look, we've got this income coming in? Or will it be a matter of, do you think, waiting until the hard cash is in before the market recognizes it?
Yeah, look, I mean, we work in a very risk-averse environment these days. We do. And people want to see, people work hard for their money, and people want to see where they invest it, want to see people working hard and spending it wisely and achieving it. So when we get to a point of cash generation and so on, people want to be able to see that. They want to see our bank balance build. They want to see us using our cash resources to buy additional interest in projects, to buy more trucks, to buy more drill rigs and so on. They want to see us use that cash. But first and foremost, they want to see the hard cash generated. And, once we've got that going, and once we've got a few quarters under our belt, getting the sort of brokers to give us the valuations that I believe we merit, then of course, I mean, look at you've got a 5-year operating cash flow here, pre-tax of what? Almost 50 million, 44, 45 million, okay? 9 million per annum. You use any EBITDA multiples that you'd have on valuing companies, that would value us at a 40, 50 million dollar company easily. But the market is risk averse, and we need to deliver, and we need to do it consistently. When we do that, we'll get those valuations. Until then, investors are going to be rightly cautious about where they put their money. I do that. I'm cautious where I put my money. Like always, but I obviously back Marula, I back all the other companies. But investors are cautious, and they want to see certainty. Simple as that.
Well, Jason Brewer, as always, the CEO of Marula Mining, thank you very much for your time.
Thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.